one other kind of red flag that stands out maybe for investors, or yellow flag maybe, is the presence of an activist stake in this business. So Biglari Holdings is run by Sardar Biglari, and he has held a very large stake in Cracker Barrel over a period of time, up to nearly 20% for a long period, although he has been selling it down over the past. He's been very open about criticizing management's capital allocation strategy, and he has been behind some of the shareholder rewarding aspects of Cracker Barrel's dividend policy over the past few years. What should investors know about this activist stake in Cracker Barrel and what it means for the investment?
So Biglari Holdings now, I believe, based on an article you sent me, their holdings are down to about 15% from a close to 20% stake. This 20% stake has been a sore point for management for many years because they've always felt that Sardar Biglari Holdings are going to take a greater stake. And so they adopted this poison pill to combat that. But investors should know that actually by remaining sort of under a complete control, Biglari Holdings has had a positive impact on the stock. They've helped improve operating margin. They've helped improve cash flow, which has rewarded shareholders. They really agitated against this expansion without looking at profitability first. Some other things they've done, they've actually they forced management to break out the retail sales, which management had never done. So there's several actions that the company has taken that Biglari Holdings has agitated for. An interesting thing that you pointed out to me, Nick, is that they've never given credit to the activist shareholder. The activist shareholder will point out that X, Y, or Z needs to be done in a very loud voice. And the pattern is that management will next quarter start implementing those changes as if they came up with it themselves, which, I guess if the share price is rising, Biglari Holdings doesn't need the credit, but I find that very interesting. The one thing that I really quickly wanted to talk about in terms of this poison pill, this dispute between management and Biglari Holdings. Biglari Holdings has always maintained that it doesn't really want to have more than a 20% stake. And for its side, it's said that, look, if we take more than a 20% stake, that's going to trigger a debt covenant, which will then make us have to immediately pay $164 million to our lenders. So we're not going to go above 20%. One other thing that Biglari has always maintained is that there is a act on the books in Tennessee called the Tennessee Control Share Acquisition Act, which prohibits a shareholder who owns a 20% or greater stake in a company from voting more than 20% of their shares. So even if they were to acquire 30, 40, 50%, they wouldn't have the voting control past 20%. And so they've often argued that, hey, this whole poison pill issue is moot. We can't because of our debt covenants, and anyway, the law prohibits it. Management's never really responded to that. I will say, going forward for shareholders, you sort of want Biglari to keep that 15% stake. They've been good for Cracker Barrel. They've kept management honest. They've been responsible for a lot of good change. So your druthers would be for Biglari to stay invested and stay active with this company.
Yeah, I would say he would be much more identified, at least from a shareholder's perspective, as a white knight than a corporate raider in this situation. It really has been very rewarding for shareholders over time. If he's beginning to sell down his stake, I don't know if there's any read-through to that for investors as to what the potential upside might be for the investment over the long term. Definitely something to continue watching, both for his advocacy and just maybe as a signal to what opportunities there are for the business. Last thing I wanted to address, and we've touched on this a few times, is how the rise of off-premise sale, this food delivery concept, how that might affect Cracker Barrel. Obviously, we mentioned that Cracker Barrel's retail strategy depends on getting folks into the restaurant to eat at the restaurant and then converting them into retail customers. Of course, if folks use delivery, they don't never end up in your restaurant, and they can never be converted. Cracker Barrel is investing some in off-premise sales. You mentioned some food truck concepts they might be doing, as well as they're expanding their catering and takeout offerings. What are your thoughts on the rise of off-premise sales and what that means for Cracker Barrel as an investment going forward?
it's obviously an important trend for the company to explore. We see so many companies. Chipotle is a great example of trying to expand off-premise sales either through catering or have people come in and take food away. For Cracker Barrel, it's more catering. The only question that I've got, I know you've got a great question, Nick, but the only question that I have is, given that so many of the locations are interstate locations, so they're not really smack in the middle of big urban areas, they tend to be around smaller metropolitan areas. How big is the opportunity to do business catering? I think it's limited. And sure, it may be a good revenue stream to explore, but I have my doubts that it's this major source of income that management is sort of trying to communicate that it could be. I'm a little skeptical on that front.
Yeah, I think wrapping it all together, I think Cracker Barrel exists in a niche that I think makes it very difficult for someone to come in and disrupt where they operate. However, both due to the nature of the business in that you need folks to come into the restaurant to sell things, which is moving counter to more trends toward delivery, as well as just the retail items that it sells, its old country store theme, the Southern food is going to cap its ability to really grow and move nationwide. I may be wrong there, but that's my belief. So I think Cracker Barrel, given the assets that it has and its positioning, is going to continue to make money over time, and is going to be probably a really attractive investment from a dividend perspective, just spitting out cash over time. However, from a capital appreciation point of view, I don't know how excited I would be in buying this business, looking for it to double over the coming years. What are your thoughts on that thesis, Asit?
I think that growth will rest more on menu innovation than almost anything else because it is this niche product. I agree with you. We'll see how this westward expansion works. There may be some opportunity within the next 5 or 10 years for some unexpected returns. Let's say if units accelerate faster than expected or the concept really takes out west. But if you are a dividend-oriented investor and you want capital appreciation with some downside protection, this isn't a bad stock to look at. And that's where the beauty of this particular concept lies. Like you said, Nick, the interstates are going to be here long after you and I are gone. And I believe, Southern food will be popular within the South long after you and I are gone. So there is something to be said for buying this model for what it gives to you. That so far 5 to 7% effective yield on the rising dividend and special dividend.
Yeah, definitely interesting investment opportunity, Asit. I'm heading down south tomorrow for Mobile, Alabama, Mardi Gras, so maybe I'll get hold of some Southern food while I'm down there.